welcome to Money Control. You've tuned into IPO Watch and I'm your host, Nikki Mirchandani. Yet another buzzing week for primary markets. More than 4,600 crore worth of funds have been raised by nearly 12 odd companies for the week ended December 2023. But to know more if these companies are actually just a candidate of listing pop or fundamentally strong companies, let's bring in our in-house expert, Money Control Pro Research Head, Madhu Chandade, who joins us this evening. Hello there.
Hello.
All right, pleasure having this conversation with you. Let's start off with of the 6-7 public issues which have opened for bidding this week, or rather just opened for subscription. Motis and Jewellers got maximum traction, subscribed by almost 159 times, but the issue was an avoid by MC Pro. What's the rationale behind that?
Yeah, sorry, can you repeat that question, please?
Sure. I just said that, of the 6 issues that we had, Motis and Jewellers got maximum traction. It got subscribed by almost 159 times, but the issue was as an avoid by MC Pro. What's the rationale behind that?
Yeah, that's a great question. In fact, after looking at the subscription number, one might think that there was something amiss in our analysis, but that's not the case. Motis and Jeweller is a small jeweler, based out of Jaipur. And the reason why we had an avoid rating on this IPO is because we were not too happy with the corporate governance quality of the management. Basically, as you might be aware, that the management has been alleged for baiting an IPL. They have also been accused of manipulation in volumes, and they were pulled up by the regulator. And then in terms of the IPO proceeds, also part of the money is going to retire debt of the banks, but the high cost debt of which is kind of borrowed from the management and other group companies, that stays. So we were not too comfortable with the credential of the background of the management, and we felt that there are better plays to participate in the jewelry opportunity. We do understand, and we have been very bullish on the sector, but we are not too comfortable with the management quality.
That's exactly the cutting edge that we were looking for, Madhu, from the conversation, because in a market like this, anything and everything is flying. Another jewelry maker, RBZ Jewelry, also opened up for bidding for subscription. What's your view? Is that also an avoid? If yes, then which of the jewelry makers do you really like within the listed space?
So coming to the other, which is the RBZ, it's also a very small regional player. It's based out of Ahmedabad. Here also, we had a little bit of a concern with respect to the management. There was not proper disclosure of all the information on the management, and many of the management members have related business. So whether there is a non-compete clause or something, that was not very clear. Previously, one of the rating agencies had suspended the rating on the stock, on this company, basically because of non-disclosure of information. And in terms of the size, it's a very small company with a part of the business going into retail, which is high margin, doing decently well. But there is also a wholesale part of the business which is not doing too well. Although the valuation looks extremely attractive, but given all these concerns, we felt that there are better plays to play the theme. And coming to your question, what are the themes? What are the stocks that we are comfortable with? Of course, the top of the line is Titan, which continues to delight investors with performance quarter after quarter. In addition to that, there are some small regional jewelers which we are very comfortable, and we have been recommending them continuously. One being Thangamayan, which is a south-west player, and another one is a recent listing as well, which is Senco. So we are very comfortable with these regional players.
All right, point well taken. Let's also discuss another issue which got maximum traction, that was Happy Forgings. The only concern I felt was revenue growth for 6 months ended slowed down to 12% versus the peers showing the number of 25 to 30%. A bit of valuation comfort. What was your assessment?
So Happy Forging is an issue which is, I would say, in this week, this has been our top pick, honestly, because in terms of the execution capability, they're absolutely top of the line, which is clearly brought out by the kind of margin that they earn in the business, which is in the 27-28% margin. So, in ancillary companies, when you have a 27-28% of a kind of a margin, which means that you are into doing something which is a very high entry barrier. You're very well entrenched with the clients, and that is kind of well brought out by the margin that they earn. They have a very decent balance sheet, and in terms of the valuation also, it's at a tad discount to the peer group. So overall, we feel that it's a very strong company, and it is leaving money on the table for the investors. So overall, it's a great issue.
Sure. Madhu, I also spoke to the management. Money Control did speak to the management, and the company expects revenue CAGR to stabilize now at around 20 to 25% to a number which was roughly around 40 odd percent. How do you see that? Is that already, you think the valuation comfort actually is a good indicator that this has already been priced in? How are you looking at this aspect?
See, your point is valid that the growth is decelerating. But, given a certain size, after a certain size, growth has to decelerate on that kind of a base. But what we like about the company is, it's into heavy forging, and, it's into precision engineering. The user segment that they have, both in auto, non-auto, they have the marquee clients. And this is not a business where anybody and everybody can get into the business. So in terms of margin, in terms of return ratios, they're going to be quite decent. And I think even in this market, if you're getting a 20-25% kind of a growth with very high quality of earnings, I think that's a very exciting proposition. I'm not honestly concerned about a deceleration in growth from 40% to 25-30%.
All right, point well taken. Since you have said that Happy Forging is actually the top pick of the week for MC Pro, isn't fifth largest NBFC MFI actually cutting it to the list, because it's a microfinance company at the end of the day and the theme has been pretty vibrant? How are you looking at that?
Yeah, we are quite comfortable with Muthoot Microfinance also. The reason being twofold. One is we are quite comfortable with the parentage, Muthoot Finance being the largest gold loan NBFC. Secondly, the operating environment for microfinance itself is improving. As you all know, that microfinance was in deep trouble during the COVID times, and this entity was no exception. But they all have done huge provisioning, and their balance sheet has been cleaned up. Now the loan growth is seeing acceleration, the credit cost is getting benign, and soon they will start reaping the benefits of operating leverage also. With an increase in volume and penetration. So the ROA, which is now at around 2.2%, we see enough headroom for the ROA expansion. And with all these, this issue is still at 1.6 times according to our calculation FY25 book, which is definitely at a discount to the top of the line microfinancing companies, and we do see that this company has a headroom for ROA expansion and hence multiple expansion.
Sure. Let's also talk about Sachin Tendulkar backed Azad Engineering. It's an aerospace manufacturer and also got subscribed 70 times. Revenue growth seems to be a bit patchy and a significant contribution, almost 60%, coming in from top 5 customers. What are you making out of it, and is that a subscribe to?
Azad Engineering is a great company. It's a very differentiated business. Precision engineering is not something which anybody and everybody can do. And with a 33% kind of an operating margin, that tells you that it is doing something differently, and it is definitely a good company to look at. But what we don't like about Azad Engineering, one is something that you pointed out. Yes, there is a lot of client concentration. Secondly, a lot of the revenue is coming from power. But other than that, also there are 2-3 issues. One is their free cash flow generation has been quite poor. And in this context, if you look at the valuation of the company, it's at about 41 times forward earnings, which is way too expensive according to us. So Azad Engineering is definitely a company which investors should keep in their radar. But in the volatility of the markets, in the secondary market, you might get the stock at a better valuation. So we are a little more greedy about the valuation as far as Azad Engineering is concerned.
All right, point well taken. How about Credo, Mumbai-based Mufti Jeans brand owner? We spoke to the management, of course. The revenue overall has grown at 5% from FY 2017 to 2023. They expect the similar kind of trajectory also going forward. Is that a cause of concern for you?
See, Credo is an extremely efficient company. Although you rightly pointed out that the drawback of this company has been the dirty revenue performance. But in terms of margin performance, if you see, they have been absolutely top of the line, and they have managed their balance sheet very well. Their return ratios are extremely healthy. And the issue is at a discount to the peers. By peers, we are taking here Cable Kiran and Canterville Retail. So the issue is at a discount to both these companies. But definitely, as you pointed out, revenue performance is a matter of concern, is something to be watched out. But, given the long-term trend of the market moving towards branded products, and this company is into premium and mid-premium kind of brands with a very large footage in the tier 2, tier 3 cities as well. So we think that there is a macro story here of a preference for brands, but we need to be careful and we need to watch out for this revenue performance going forward.
All right, the last question, of course, I have for you is a very broad-based question, Madhu. IPO rally stays the course with 60,000 crore share sales lined up for the next year. So it's just not, the frenzy doesn't end here. There is more. What are the 3 things that you think investors should now keep in mind before subscribing to these initial public offerings, especially given that allocation is a big issue anyway?
Yeah, I mean, that's a fair question because, it's giving a feeling that you are spoiled for choice with so many IPOs lined up. But when there is a high tide like this, typically in a bull market like this, everything seems very rosy. But you do not want to be saddled with a company that you don't want to own for the long term. So that's why it's very important that before subscribing to an IPO, you need to know what you're getting into, whether it's a good long-term bet or not. And secondly, if the issue size is too small, the issue gets subscribed umpteen number of times, by which your allocation is minuscule, then there is no point in holding on to a minuscule allocation, because that is not going to make any difference to your overall portfolio. So you need to do your homework very well, especially the quality of the business and the kind of valuation that you are getting into. As I pointed out, Azad Engineering, we are happy with the company, we are happy with the business, but we are not too happy with the valuation, and we feel that in the secondary market gyrations, we can get the we can get the company cheaper. So the 60,000 crore is a large number. It will be a mix of some excellent companies, some not so good companies, but in the euphoria, everything might seem very good. You might be tempted to apply to a lot of issues thinking that you are going to have handsome listing gains, but listing gains is not the end of the story. You need to subscribe to IPOs for investing in sound businesses which will contribute to your portfolio in the long term.
Point well taken. For those of you who cannot do the homework, at least subscribe to Money Control Pro. We do the homework for you. We ask the hard-hitting questions from the management, decode their business style, and of course unravel the essence of their unique proposition. Like Madhu has been pointing out, a few of issues, corporate governance issue, promoter history, financials. We skim through it all at Money Control Pro. So do subscribe and for that as well. Madhu, thank you so much for taking out the time and having this conversation with us.
Thank you.
All right, we're also going to be now navigating our conversation towards the further development of the primary markets. Of course, all these issues also are going to be lined up and will be listing in next week. Where is the grey market premium going to be coming in from? We ask Prashanth Tapse, who is the research analyst at Mehta Equities. Evening there. Good to see you again.
Very good evening. Happy Christmas.
All right, Merry Christmas and seasonal greetings there out to you. First, I would like to ask, of the 6-7 issues that we spoke about it, of course, with our in-house expert too, just to get a fair share of assessment. What do you think? Where is the grey market premium more coming in for? Just don't say that it's going to be Motisan Jewelers. It's just like a company where we are listing in a corporate governance issue or perhaps a bit of background check done there. Few issues have cropped up. How are you looking at it?
Yes, you are rightly pointed about Motisan. It's a surprise IPO to everyone. Analyst is getting difficulty to see this grey market being at 150% on the issue price, having so much of governance issue, promoters issue. It's a great surprise for us. But among these 6-7 IPOs, I like Azad Engineering a lot, mainly on the back of the niche products they are manufacturing. They are into airfiles, air blades, which is very much a niche product, a life critical product and a mission critical product, which is used in aerospace as well as energy and power turbines and all. So I think Azad Engineering is grabbing a lot of grey market demand in the current markets. Backed by this again, the pharma company, which is Credo, which is the other company which is into Innova CapTap. That is the company which is also getting demand on the grey market. So these two IPOs are on my radar.
Okay, so Azad along with Innova CapTab is the company that we are talking about. Azad Engineering is a Sachin Tendulkar backed company, and pretty more bunch of cricketers are also pretty much parked in this company. So do keep an eye out in this one. The grey market premium seems to be a bit on the higher side. Apart from that, Muthoot Microfinance and Happy Forgings. These are, of course, the top picks that we are going to be talking about given the size of the issue also. Along with that, Muthoot Microfinance is something that I really want to extensively talk about, given that there are this host of microfinance companies which have come on board. What do you make out of it? Do you prefer something else over this one?
No, I think Muthoot Finance is a great company. They are into great business model of all the microfinance businesses. The main differentiator between the listed company and the Muthoot Finance would be on the valuation side. They are coming out with a price to book value of 1 to 5, 1.5 to 1.6 times the other peers. So that is the only differentiator right now with the peers. Rest, they have a great parentage support, which will be keeping support. They will be getting great credit ratings because of the parents' business model, which is into gold financing. In NBFCs, microfinance, I think Muthoot will be a great idea for a long-term investors. Listing in, I think, because of the market change in the pattern recently, I think Muthoot will see a flat listing, but for a long term, Muthoot would be a great company. Again, when we talk about Happy Forging, yes, on the valuation side, very reasonable. They have a great clientele list, and I think they are doing great margins of 25 to 28% on EBITDA. I think in a forging business, doing a EBITDA margin of 25% and above is a great deal. And yes, I agree with the valuations. When they compare towards the Bajaj, the Bharat Forge and all, yes, they are very much cheaper in terms of the valuation guide. But yes, they are doing great. Promoters are great. The products are great. And I think for a long-term investors, Happy Forging would be a great company to invest.
Okay. Okay, and which is the company which is just, you think, a listing candidate?
Again, I think Azad would be the great company for a listing pop.
Okay, so no, not a long-term subscribe to that one. It's just a subscribe for listing pop. Perhaps
I'm okay with both listing gain, because in this market 50 to 60% listing gain is a great thing. If we can just analyze how DOMs have had a great listing, but the grey market was almost asking for 80% and above, but the listing was almost 40-45%.
Prashanth, one thing that I would want to highlight, and I think that's the misery of all the investors around, allocation. You have enough demand but very limited supply. How do you iron out that issue?
Very difficult. Yes, I should do great research on this. Again, picking one company out of 8 companies is a difficult task. It is a 24 or 40 hours job for an analyst right now. But yes, if you do a fundamental analysis about the business, of the industry and the promoter and the business model, I think we should do those things to invest, not to go with gray market and all. Those are like 70-80%. Yes, they do give us the right way of understanding for a retail investors, but an informed investors has to look at a fundamental research about the company, the products and the management and all. So yes, you are rightly asking, picking one in the 8 is a difficult task right now.
Picking one is the task, getting allocated is a task. It looks like it's just a crazy frenzy. You know, there's an inside joke which is going on which says that if this company was supposed to get relisted again, then, you know, your own company is supposed to get relisted again, you will probably get twice or thrice the price that you once commanded at that point of time. So that's the amount of liquidity which is floating into the markets. But of course, that's on a lighter note that we're talking about it. Between now Motisan Jewelers and RBZ Jewelers, which of the two do you like, both in terms of the long-term story as well as just a listing pop candidate?
Yes, see, on a long-term story, RBZ would be a comfortable story right now because of the valuations again and less of governance issues. They have some promoters or insider stories like that, but when we compare towards the RBZ and Motisans, there are a lot of issues with the governance in the Motisans with respect to whatever the SEBI governance or the cricket issue and a lot of things, and the concentration of the cities. Again, that is the biggest risk for both the companies. On the valuation side, RBZ can be a better candidate, but again, market is surprising us to give a higher premium to Motisans with 150 times subscription. It's a surprise, and we are going wrong in this kind of analysis.
Do you remember the last time when we spoke, you said that India Shelter Finance Corp is expected to be the dark horse?
Yes. I think
do you still hold the same stance?
Yes, I think still the darkness is still there. I think the sudden change in the market trend last week because of the COVID news or RBI intervention in terms of AIF and all, I think these companies are still in the dark race. Obviously, that will do great in the long term.
Okay, so your conviction pretty much is intact. But given the situation that we're facing in the markets, like you pointed out, you know, these are the couple of things. You have the COVID fear, you have a couple of other parameters. It's an holiday extended week also where the volumes are thin. You think premium of these companies which are expected to be listed are going to be, you know, perhaps compromised because of this?
I think already the compromise has started, the way how Inox has listed against the Grey Premium, and I think even there is some kind of discounting already done in the Azad Premium. I think yesterday it was around 80-85% plus, now it is around 60-65% plus. The long weekend and the underperformance of Inox in the listing price, that is been getting affected, but I think again coming week at the time of listing of Azad, again a lot of market momentum will change, and already it has changed from last 2 days. Indian markets are again in a buy on dip strategy, and we are in the positive side.
All right. I hope we remain on that buy on dips, and it's just a small blip like we have seen and not something that we need to worry about. On that note, Prashanth, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation. Merry Christmas and greetings to you.
Sam, to you, and thank you for having me. Thank you.
All right, with this it's a wrap. Hope you found this entire session pretty insightful. But with this it's a wrap. Thank you so much for tuning in.